Welcome to Business Studies for SS1 at Light Tech Academy. Today we study the stock exchange, functions and operations. What is a stock exchange? A stock exchange, also called securities market or securities exchange, is an organized market where securities, shares, bonds, debentures, government securities, are bought and sold in a formal, regulated environment. It provides a secondary market, a market where already issued securities are traded between investors, as opposed to the primary market where new securities are issued directly by companies to investors for the first time. Nigeria's stock exchange. In Nigeria, the Nigerian Exchange Group, NGX, formerly known as the Nigerian Stock Exchange, NSE, is the primary stock exchange. It was established in 1960 and is headquartered in Lagos, with trading floors in other major cities. The NGX is regulated by the Securities and Exchange Commission, SSCE, which is the apex regulatory body for the Nigerian capital market. Key participants in the stock exchange. 1. Stockbroker, a licensed professional who buys and sells securities on behalf of clients, investors. Clients cannot trade directly on the exchange, they must use a stockbroker. Stockbrokers charge a commission on transactions. 2. Market maker, a dealer who quotes both buy and sell prices for securities and is always willing to trade, providing liquidity to the market. 3. Jobber, dealer buys and sells securities for their own account, not on behalf of clients. Makes profit from the spread, difference between buying and selling price. In modern markets, the roles of jobbers and brokers are often combined. 4. Company secretary, handles communications between the listed company and the exchange, dividend notices, rights issues, annual reports. 5. Registrar, maintains the register of shareholders for listed companies. 6. Securities and Exchange Commission, SEC, regulates and supervises the entire capital market, ensures fairness, transparency, and investor protection. Functions of the stock exchange. 1. Mobilization of savings. The stock exchange provides a mechanism for individuals and institutions to invest their savings in productive enterprises by buying shares and bonds. Without the stock exchange, these savings might sit idle. 2. Provision of long-term capital for businesses. Companies can raise large amounts of capital by listing on the stock exchange and selling shares/bonds to the public. This capital is used for expansion, investment in plant and equipment, and business development. 3. Provision of liquidity. Secondary market investors who have bought shares can sell them on the stock exchange at any time, during trading hours. This liquidity encourages investment. People are more willing to invest if they know they can easily sell later. 4. Establishment of fair prices. Price discovery. The stock exchange uses demand and supply to determine the fair market price of securities through continuous trading. Published share prices provide information to investors. 5. Government revenue. Government securities. The government issues treasury bills, bonds, and government securities through the financial markets, including the stock exchange. This helps the government borrow money from the public to finance budget deficits. 6. Indicator of economic health. The performance of the stock exchange, reflected in the market index, e.g. NGX All-Share Index, serves as a barometer of the economy. Rising share prices indicate economic optimism, falling prices indicate pessimism or recession. 7. Corporate governance and transparency. Listed companies must meet strict disclosure requirements, publishing annual reports, financial statements, and material information. This promotes good corporate governance. 8. Facilitating mergers and acquisitions. The stock exchange provides a mechanism for companies to take over others by buying their shares on the market. 9. Employment and wealth creation. The stock market generates employment, stockbrokers, analysts, fund managers, and helps create wealth for investors through capital gains and dividends. Operations of the stock exchange. How trading works. 1. Listing. A company applies to be listed on the NGX. Must meet listing requirements, minimum capital, years of operation, financial disclosure standards, number of shareholders. 2. Placing an order, an investor who wants to buy or sell shares contacts their stockbroker. The broker places the order, buy or sell, on the trading system. 3. Automated trading system. The NGX uses an automated trading system, ATS, computer-based electronic trading. Orders are matched electronically based on price and time priority. 4. Settlement. After a trade is executed, settlement takes place, ownership of shares is transferred from seller to buyer, and cash moves in the opposite direction. The NGX uses T+3 settlement. Settlement occurs 3 trading days after the trade date. CSCS, Central Securities Clearing System, handles clearing and settlement. 5. Share price indices. The NGX Composite Index, or Share Index, is the main indicator of market performance. It tracks the performance of all listed companies weighted by market capitalization. Other indices, NGX 30, Top 30 Companies, NGX Banking Index, NGX Consumer Goods Index, etc. Primary versus secondary market. Primary market, where new securities are issued for the first time by companies to investors, IPO, rights issue. Money flows from investors to the company. Secondary market, where existing securities are traded between investors, the stock exchange. Money flows between investors, the company receives nothing from secondary market transactions. Types of securities traded. 1. Ordinary shares, equities ownership units in companies. 2. Preference shares, fixed dividend shares. 3. Government bonds, government borrowings, Federal Government of Nigeria bonds, FGN bonds. Low risk, fixed interest. 4. Corporate bonds/debentures, company borrowings. 5. Exchange-traded funds, ETFs investment funds traded on the exchange. 6. Treasury bills, short-term government securities, usually 91, 182, or 364 days. Important terms. Bull market, a market where prices are rising, investors are optimistic. Bear market, a market where prices are falling, investors are pessimistic. Market capitalization, total market value of all a company's outstanding shares equals share price times number of shares outstanding. Dividend yield, annual dividend per share divided by market price per share times 100%. Price earnings, P/E, ratio, share price divided by earnings per share, indicates how much investors are willing to pay per 1 Nigerian naira of earnings. Blue chip companies, large, financially stable, well-established companies with a history of reliable performance, e.g. Dangote Cement, GT Bank, Nestle Nigeria. Insider trading, illegal practice of trading shares based on non-public information. Prosecuted by SEC. Remember, stock exchange equals organized market where securities, shares plus bonds plus debentures plus government securities, are bought and sold in a regulated environment equals provide secondary market where already issued securities traded, Nigeria, Nigerian Exchange Group, NGX, formerly NSE, equals established 1960 plus headquartered Lagos plus regulated by Securities and Exchange Commission, SEC key participants, stockbroker, licensed professional equals buys and sells on behalf of clients equals charges commission equals clients cannot trade. Directly market maker, quotes buy and sell prices equals provides liquidity jobber/dealer, trades for own account equals makes profit from spread. SEC, regulates capital market functions. 1. Mobilization of savings, channels either savings into productive investments. 2. Provision of long-term capital, companies raise large capital by issuing shares/bonds equals expansion plus investment. 3. Liquidity, investors can sell shares anytime equals secondary market equals encourages investment. 4. Fair price discovery, demand and supply determines fair market price. 5. Government revenue, government issues treasury bills plus bonds to borrow from public. 6. Economic indicator, NGX or share index equals barometer of economy, rising equals optimism, falling equals pessimism/recession. 7. Corporate governance, listed companies must publish annual reports plus financial statements plus material information. 8. Facilitates mergers and acquisitions. 9. employment and wealth creation, how trading works, listing, company meets NGX requirements, plus order, investor contacts, stockbroker plus broker places order, plus automated trading system, ATS equals electronic equals orders matched by price and time, plus settlement. T plus 3 equals 3 trading days after trade equals CSCS handles clearing indices, NGX composite, all share index equals all listed companies equals weighted by market cap, plus NGX 30 plus NGX banking index plus NGX consumer goods index, primary market versus secondary market. Primary equals new securities issued equals money flows to company equals IPO plus rights issue. Secondary equals existing securities traded between investors equals stock exchange equals money flows between investors. Securities traded, ordinary shares plus preference shares plus government bonds, FGN bonds, plus corporate bonds / debentures plus ETFs plus treasury bills. Key terms. Bull market, prices rising equals optimism. Bear market, prices falling equals pessimism. Market capitalization, share price x number of shares outstanding. Dividend yield SAT face annual dividend / market price x 100% P/E ratio SAT face share price / earnings per share. Blue chip, large plus stable plus well-established companies. Insider trading, illegal equals trading on non-public information equals prosecuted by SEC. Thank you and keep excelling at LightTech Academy, powered by LightTech Solutions Limited.